Good morning, everyone. Let's call the meeting to order. Welcome, Jennifer. A motion to approve the agenda.
So moved.
A second. Okay. Very second. All right, we'll move into the action items. Audit Committee Charter. Sally.
Good morning, everyone.
Morning.
This is just an item of business. This is the last committee charter that we have to review. We're supposed to review it every 3 years or when there's changes.
Thanks
So-
for putting it on the agenda. We don't meet that often.
No.
That's true. That's true. So this is just the audit committee work plan, which essentially, your duties are to meet with the auditor, which is today, before the audit starts, and ensure the independence of the auditors and management and the adequacy of disclosures to the public. So I didn't recommend any changes. We read through it and didn't find anything, but we're happy to add any changes that you think need to be added. And if not, there's a recommendation to move it to the board for approval.
Any
I
changes?
don't have,
I don't have any questions either.
there were a couple of minor changes on other.
We need to have this approved by the board, so I'll move to committee to approve the charter. Any second?
I second it. Does it
Okay.
need to go on consent or can it go
Can-
on? It
Yes,
can,
it-
go the general.
Could go on consent,
Yeah, we can go on consent.
approve it today.
Yeah. All in favor?
Aye.
Okay. Thanks, Sally.
Here's the tough one.
Okay, yeah,
Yeah.
the second item is the extension of the Yunt, Hyde and Barber contract for auditing services. Just to give you a little bit of background, in 2020, an RFP was prepared and advertised for auditing services. Loud and Water received 7 proposals, and after an internal evaluation committee selected YHB. We have the current contract will expire after this audit, but we have 2 one-year extensions. And we are recommending approving that extension for the 2025 and 2026 audit. The proposed pricing is in here in the write-up. You can see this down at the bottom, and it is consistent with the increases annually that we've had. And I'm happy to answer any questions about this item.
How long are typical engagements? Says our contract is currently expiring. How long was our current contract?
It was 5, so for 5 audits and then the 2 one-year extensions, and that's typically how we've done contracts in the past.
Would we extend for 5 years before we do the extensions, the 2 one-year extensions, or we typically do the 2-year, 1-year extensions and then?
So
For
what we
5
did
years.
was we did an RFP that locked us in for 5 years with YHB and then had the 2 one-year extensions
Okay.
on to that. We're asking you to go ahead and approve both those extensions
Right.
today.
Okay,
And then after the 2026 audit, we would have to go out to bid
okay.
again.
All right,
Yeah.
so we're ahead.
For another 5.
So we
years.
would do the same type of
5 years.
contract.
Okay.
Again, 5
5
years.
year,
we
2-year
would do one-year
extensions.
renewals.
Okay.
Yeah.
I think it's smart that, given that the SAP migration is happening, that we stay consistent. We don't bring somebody new into who doesn't really have as much knowledge of our system. So I'll move that we accept the contract extension.
So is that the recommended motion there?
Yeah.
Yes.
I move
that's
the audit
motion.
committee recommend approval of 2 one-year extension to the auditing services contract for Yount, Hyde and Barber to perform audits for the fiscal years 25 and 26 and forward to the full board for approval as presented.
Second.
In favor?
Aye.
We need full board approval, not just consent. You think,
Yeah, just leave it on business.
I mean,
Yeah. action item,
sure.
action item.
It's very brief. So,
Yeah. Okay. Keep losing my place here. Next up. All right. All right, Jennifer, what the audit process for this year, 2024?
Yes, this is Jennifer Files from Yunt, Hyde and Barber. I think you all know her. She's
Yeah.
here to talk about our audit scope this year. We do also in the write-up, typically the committee might recommend a special area of audit interest. We are recommending due to the effort that's being put forth this year for the S4 conversion. And we did have some special issues this year with the bond refinancing that perhaps the committee might choose not to pick a special item this year, but that's up to you. So I'll introduce Jennifer. She'll talk about the scope of the audit, and the letter's up here if you want to scroll.
Yeah. Thank you. Thank you for inviting me this morning. Thank you for having us. I and my team and the firm appreciate being of service to the committee and to the board. And we enjoy working with Brian and Sally and everyone at Loudon Water as we conduct the audit process. We've issued our engagement letter and our pre-audit planning letter for management's review, for your review, a standard letter. Again, as Sally mentioned, independence is a big part of the process, and we've already conducted our independence process to ensure that we continue to be independent with Loudon Water, with board members, with management team, and we have no concerns or conflicts over independence with regard to the audit process. So the audit this year would consist of the financial statement audit, as well as a compliance audit of federal funds received. We've already asked for a lot of information to begin the audit, and your finance team has done a wonderful job responding to those requests and providing us the information. We have expedited the process a little bit for the convenience of the team to hopefully help with the S4 conversion. So we're going to try to get it done as quickly as possible. We've moved things up about 2 to 3 weeks so that it gives them more time and flexibility as they go through this implementation.
The plan was to try to have everything final in our current system before we converted to the new system. We'll see. A lot of things are out of our control with outside information, so we'll see if we get there.
Yeah.
But that was the plan.
And we're certainly working and doing all we can on our end on the external side to make sure that happens if it's possible. Perhaps maybe the VRS information is usually the late comer to the party. But as long as we can get that information in, hopefully it can go as planned. I also wanted to mention a couple of the GASB statements that are effective for this year. As we go through the process, we will review the ACFR in accordance with the GOFOA certificate program to help ensure that you continue to receive that certificate of excellence in financial reporting. And then part of that is making sure that the new standards are implemented and either recorded properly or footnoted properly. There's a few that are effective for you this year: compensated absences and the PPP, public-private partnership standard. Those will have probably a minimal impact on your report. Compensated absences have always been recorded. Management will go through that just to make sure that there are no tweaks or changes that need to be made or assumptions in when staff may or may not take time or how much time they may take off in the upcoming year or years to be compliant with that standard. And then the PPP standard, you may have a footnote disclosure change for you or an enhancement for you, but should have no impact on the actual numbers presented. And then we look for any questions that you have, any concerns, anything that you would like to have us incorporate into the audit process as we begin.
Just a question with, remind me on the single audit, is this, if we pass this time and everything's okay, is this the last time we fall below the threshold then for doing this single audit? Yeah.
Oh, you're talking about
High
the
risk.
level of,
Yeah,
forgetting the term,
you do
Yeah, the low risk,
Yeah,
high
a
risk.
high risk, low risk, right?
Yes, so this one will be the one that then you'll fall into low risk
Low risk,
category.
right.
The threshold for single audit has been raised. It went from $750,000 to $1 million of annual expenditure. I think with your funding, you will be over that million, even with that uptick in the
Mhm.
total amount. But you will qualify with this clean audit as a low risk auditee going forward. which will reduce some of the detailed testing that the management team endures in the process.
That's because 2 years of
Mhm.
high risk. right?
2 high-risk, successful, timely, completed audits that were submitted timely. You'll meet all those criteria without findings.
This is the third high risk audit.
Yep. So two successful completed, so then we'll jump into the low risk. We still test everything in the same fashion. We still do control testing and compliance testing. The scope of the audit doesn't change, but the number of transactions often decreases because of that switch from high risk to low risk.
What do you mean by the number of transactions?
So when we design the test, if the entity is considered still high risk, there are minimum sample sizes that we must test in each of the areas: control testing, compliance testing. We look at payroll, direct cost, and indirect cost. When an organization falls and satisfies the requirement to be a low risk, then we don't have to hit that higher threshold of the number of transactions. We can bump it down, saving about 20 transactions or 20 tests per type of compliance that we're testing.
The transactions and tests are used interchangeably.
Yes, yeah. It depends on the nature of the funding that's received. Sometimes funding, it may be spent on 6 individual transactions. Other times it's split across payroll allocations, direct costs and indirect costs that are allocated. And anytime those 3 components are used to spend the federal money, we have to test each of them and make sure that they're spent appropriately.
So for example, they've asked for invoice copies, they've asked for timesheet records, approvals of timesheet records, things like that, that
And
they're
we may not
sampling,
ask for that with the low risk.
less of them.
We still ask
Still the
for,
same ones, but just not as many.
Mhm. Yes,
All right, I'm getting it.
yes. Now, if we go through the process, low risk or high risk, and we identify issues, errors, deficiencies in that population, we will expand the population to get comfortable that things are okay, or to identify if there are deficiencies in the compliance. We've not had that experience in the past with Loudon Water. I don't anticipate that going forward, but even as a low risk auditee, if we were to find something or question something, we would then expand the population to make sure we have appropriate coverage and that we're comfortable with the results of the testing.
I mean, we can't have that much. We're just over the million threshold. So refresh my memory where that even comes from. I know if we cashed it on the FEMA grant, that would be some of the money, but PPE, that was in the past, but what, like this past year, what were some of the things that got us over $1 million?
The biggest is our FEMA grant,
Okay.
so that's the biggest chunk. We do have a little chunk for the lead service line grant that we received, but that's small.
So it's basically the FEMA. So we're drawing on that grant right now.
Mhm.
And then we have the ARPA funding, but that again was smaller. The big
Okay.
driver is our,
And that's going to continue to be for the next several years.
Yeah.
And if you find irregularities or something, and you said you expand, is there any requirement to report out that you found these at all?
Yes, there are requirements in reporting. If we have known or questioned costs that
Mhm.
exceed $25,000, that gets captured into the report and reported out in your CFA package. If there are material weaknesses identified in the control environment,
Mhm.
if there are material weaknesses in the compliance testing that are identified, those all get reported in the schedule in the report package. And they will be uploaded with your report package to the Federal Audit Clearinghouse. From at that point, generally, the Federal Audit Clearinghouse will pass it through to the federal agency that awarded the money. And then it's up to the agency to determine what outreach or
Additional work.
recourse they'll have on the funding.
So it's not a clean audit then? at
It
that
may
point?
not be a clean audit.
May not be.
But again, with the last 2 audits, we didn't encounter any of that with Loudon Water's process. And certainly, if anything comes to light in this process, we'll work with management. We'll notify the committee before we get to the end result if there are any findings.
There's also, as a reminder, an IT audit going on at the same time. So Mike Beardsley's been heavily involved. He's here if you have any questions on the IT side. And then my right hand accounting manager is in the back too, Donna Kovalyak. I don't do it all alone, so I just wanted to shout out that.
You don't do it all alone.
No, not at all. And so she's here too and is the main manager of all the requests that come in, so.
Your question?
I don't have any questions. You know, and when we were talking about the grants, and we still are looking for other grants as an organization. So this special audit portion will probably continue.
Yeah.
Yeah.
If this year or next year there are additional grants or FEMA or whatever, is that kickback that we are at high risk, or do we stay at low risk once we've completed the requirement to,
You would stay at low risk.
okay?
Mhm. And even cost wise, adding additional funding grants probably doesn't increase the cost of the compliance audit because
Mhm.
the foundation is the foundation of the compliance audit. You know, unless you have an enormous grant that comes in that is either complex or unique or has specific testing requirements that is asked for by that agency outside of the normal compliance supplement. I would think most of the testing would be pretty consistent. We would spread that across the different programs and do a determination of type A, type B programs. We would do a risk assessment of every program that you receive. But bringing in additional grants to the organization, even federal monies, I don't anticipate would have additional cost to Loudon Water.
So has field work begun?
The first set of prepared by client items were due the 3rd, so Monday, and we met all those. So now the second batch is due the 17th with active field work, which is where we're daily talking to the auditors, is March 3rd through March 17th, 2-week
Does
period.
YHP come in on site to do work? Is it all kind of like gathered up and then sent to them? I'm just curious, logistics.
For some of the HR records, they've come on site
Okay.
due to the sensitive nature of that documents. I don't know with the IT side if they come on site or if it's all.
Typically remotely.
We do a lot, yeah, through the portal, which is great. So we upload it, the questions come back, we can comment. So that's typically how we work now.
We leave it up to the clients for the most part as to what their preference is for completely on-site field work, completely remote field work, or a hybrid in between. Loudon Water's records are maintained electronically. So a lot of them can be easily uploaded to our secure portal without an inconvenience to their team. But again, anything that is sensitive or things that we need to see signatures or data for, we will do those tests on site.
And then a commitment letter, I assume we sign that electronically too, or after we approve the extensions, then
Yeah.
something goes out and you're engaged for another year vis-a-vis the
Yep.
portal signature. Okay.
Mhm.
I just got one of those too. That's why
Oh, yes.
it's so hard to.
Now, the tax portal might be different than the audit portal,
Yeah.
but it's same concept.
And talk about the SAP conversion, what is involved in testing with that? Talk about a little bit about your process for that.
Well, I don't think anything this
Yeah,
year.
that'll be next year,
That'll be next year.
where
Okay.
they're really looking at, well, we'll do it ourselves as well, but making sure everything, transferred over correctly and tied and none of the accounts looked wrong and all of that. But since that's, it's supposed to occur in about 8 weeks, like
8 weeks.
8 weeks, yeah. So that'll be for the 2025 audit, but that's why they're pushing it up about 2 weeks this year to try to get everything.
But what staff is
done.
doing, to
Yeah.
test is we have test scripts to test each of the processes in all the areas. So not just accounting, but engineering and.
All the packages.
Yeah,
Yeah, so
everything.
we're currently going through those individual test scripts and documenting defects, seeing if they work, seeing if the approval flows. the data testing, the initial data testing was already done and passed. So this is just more functions. So
So what we'll be doing through this audit process is a lot of inquiry and observation between Brian Newlin, our risk advisory services partner, and Mike and his team. And then our financial audit team with Sally and her team, documenting a lot of the processes that they're doing right now to get through to this April 1 conversion. If we see anything, any questions, any red flags, we'll communicate that to them now, so that they can consider it or take it, through their testing and process. But then next year, will really be the heavy lift of looking at the data and the switch between the conversion from old to new. And generally, we like to come in the latter half of the year and look at that before year end. It gives more time. It's not overlapping on top of the audit process. And then if anything needs investigated, then there's time for your management team to do that before you get to year end close.
Did you had other clients go through this type of conversion with SAP?
Not necessarily with SAP, but software conversions happen every few years
Yeah.
for our clients. It has become a normal
Yeah.
operating process.
SAP is so much easier than Oracle, but I didn't say that out loud.
Is your mic on?
I'm sorry.
Is your mic on?
My mic's on. Did you hear me? Oh, okay. Good.
And we did something similar in 2015, because when we converted from Munis to SAP in 2014, that was a much bigger change.
Yeah, that was-
And
that was-
I believe
was
we
about-
did almost quarterly
Yeah.
audits along the way for that. This isn't quite as drastic as a change, but yeah, it'll be good to get
I
ahead
had
of
some
it.
issues.
Yeah, we survived.
Yeah. I remember it well.
Yeah,
Yeah.
This is our last item, right?
correct.
Right.
Yeah.
I was gonna ask a question to you about the compensation we received from Dominion for the lease of the property. I saw it was classified as operating income, and I asked a question at the previous meeting about that. Can you elaborate on why that is classified as operating as opposed to non-operating?
Absolutely. That's a great question and a timely question. GASB just recently issued their newest standard, and it covers exactly what you have here. In that GASB, there's a section that talks about proprietary funds, which Loud and Water is, and the classification between operating incomes and non-operating incomes. There are about 4 or 5 specific items that GASB issues that says these items qualify as non-operating income. Anything that doesn't hit that criteria should be reported as an operating income. So we've sent that information to Sally for her to go through and document. But from what I'm looking at, I haven't read the documents in detail yet, but from an early glance, I don't see where that money from Dominion hits those criteria for non-operating. So, but now that standard will be effective for Loud and Water for, I believe, 2026. It is allowed to be early adopted or early implemented, but I would encourage the finance team to look at that and use that as the guide for recording it now, so that a change doesn't need to be made in 2 years when that GASB is actually effective for Loud and Water.
So what is the impact of that decision on the money, whether it's operating or non-operating?
It really just determines where it sits on the income statement.
There's not a tax implication or?
No.
Okay.
No, sir.
I'm not just worried about the following year, we don't, it looks like our operating income like this artificially increases it. Whereas
will,
on the
yeah,
non-operating
yeah.
side, no one really questions it, but all of a sudden, wow, your operating revenue went down substantially. What happened?
Yeah.
There's obviously an explanation for that,
Mhm.
but that's the only reason I can see why parking it somewhere else makes more optical sense.
Now, you do have options. I mean, the GASB speaks to what is operating and non-operating, where it sits on that income statement. You do have options in how you present it within those sections. You can call it out on its own line item
So you could have a
in
subsection
operating.
Within the operating income, but
you can be very transparent and just have it as its own
Yeah.
line item
Yeah.
within that proper section. I think you've done that probably in the past within non-operating even, given more detail down there because you don't want to commingle things just as
Exactly.
other. So you do have flexibility in what you call it, where you put it, I mean, what it's combined with, or if it's standalone. You'll also have an opportunity to show that in your cash flow statement. It can be separated there as, in its own line item versus commingled with all revenues or revenues from customers or whatnot. And then you'll certainly have a footnote disclosure on the transaction as well.
What's the GASB? Do you know the new GASB rule that is determined?
104, I was gonna say 104.
Numbers, I can pull it up.
I want to say it's 104, but we'll look.
I have it in my inbox.
They have them on their phones. Look at
Yeah.
this.
One oh three.
Good job. First to find it. And you were right.
So 103, that existed before, right? It isn't, it's just an add-on to it.
It's an update.
It's a clarification. There obviously was questions about organizations and where they reported inconsistencies and where they put things in versus operating versus non-operating. So it was one of the projects that GASB took on, and they just issued that standard. I think it was maybe April or so, 2024. The first half of 2024, I think, was when they issued the standard. And then they always give a little bit of time for it to become effective and to give time for organizations to read it, research it, and to implement it. But it is one that is available for early adoption.
They're fun.
It'll be fun.
What does this mean? What does this mean?
But if I understand correctly, we'll put it in its own section, so the optics, it'll be called out and it won't look like we had a fall off in our revenue.
It'll look like that next year when, there's no way to get around that. But
Yeah.
Then you just tell people, well, did you read the footnotes?
Did you read the
Yeah,
footnote?
there's an
Right.
explanation for that, so.
Yeah.
Yeah, because
Yeah.
in the ACFR, it says, highlights for this year, and then it has highlights for last year, and so.
Yeah.
In the description, well,
And then
The general public's not going to read it, but our bondholders will. Yes.
yes.
And then do we want, this is kind of an esoteric question, but do we want to call out the specificity? I mean, do we have to? Do we want to?
I mean, we can talk about it but it'll probably be, we can put probably something as generic as, easement
Right.
compensation.
Easement
You know,
compensation,
so,
yeah, yeah.
We can certainly discuss.
Yeah. You don't have to say Dominion.
The agreement is public. I mean, I don't think it was published anywhere, but it's a
Right.
public document that's
Yeah, yeah.
available for anyone if they want.
I was just thinking, maybe it's better to say it's an easement.
Mhm.
That's what it is.
Yes.
I
Yes.
mean, typically, we don't, when we get easements or receive these easements, do we disclose the exact nature of the other entity involved in the easement agreement and an AFR?
Yes. I mean, typically.
generally, yeah.
No.
Okay,
No.
so then that would be consistent to not
Mhm.
Yeah,
just give the specifics of it.
there's no requirement that we have to disclose.
Really,
For the
the big
party.
difference is just the dollar
Right,
value associated. This.
but something to
It's,
consider.
We do easements all the time.
Yeah,
It's
exactly.
ordinary.
Yeah.
usually we're paying for easements.
We wish we could do easements like this all the time.
Yeah. This is a little bigger.
That's all I have.
That's all I have.
Yeah,
to-
that was a good question, Terry.
Anything else, Jim?
Nope, that's it.
Good. Anything else?
The next meeting,
Yeah,
Meeting?
next meeting.
It's the next meeting.
Yeah, so we'll regroup once the audit's done. Again, we're trying to wrap up early, but as Jennifer mentioned, some of it's dependent on BRS because we're the oddball because we're not a mid-year fiscal year, so they have to do stuff special for us. So we'll
It's
see.
several months.
Yeah, typically it's in May.
May,
They're trying
yeah.
to wrap up a little earlier, so maybe April, but we'll see when we get everything.
And we weren't necessarily trying to wrap up the ACFA earlier, but just the, any journal entries, adjusting entries we might have. So
They will get-
hopefully you won't hear from her before that.
Yes. If we come across anything, you will, but otherwise, we won't come back to report results until the end of that meeting. But yes, our moving this up really wasn't to completely alter the timeline of everything, but just to get out of their way so that they can conclude the audit, have all of the final adjustments in, books finally closed for the year, and then can move into IT changes without us, without auditors.
All right,
Thank you.
motion to adjourn,
So moved.
second,
Second.
all in favor?
Aye.
All right,
Thank you very much.
Thank
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 you.
you.
Jennifer.
Get out there and